Welcome back to another trade recap. Today we had CPI. We did end up dumping because of it, though. Um, Usually, though, after a dump on CPI, the morning session is going to go one of two ways. It's most likely going to retrace back up into this 50% to close that imbalance from CPI. That's how we were able to profit from this move. But let's jump over to the daily. The daily, obviously, not much going on, right? We had the dump, initial dump. This is from CPI, but where we're tracing right now, because we have an imbalance that needs to be filled before we could probably either head lower or continue to head higher, right? So if you look at the 4 hour due to CPI closed below this fair value gap, right? So now we have an inverse fair value gap here, which is signaling to me not only that, but we also have a break of structure, right? So a break structure because of this candle to the downside, signaling to me now that we could potentially head lower, but this could have also just been a gigantic sweep. Only time will tell. But that's kind of the bias I have going in for the 4 hour. On the 15-minute, these are the two zones that I had marked out that were kind of catching my eye, right? Because we came up, bounced, 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 CPI, bounce. So I know that we also have relative equal highs up here. Right now, the big thing that I was focused on was the fact that we did have CPI with this major drop off, right? So typically when we have a major sell off, well, there has to be a retracement. So this little tool right here is called the Fibonacci, right? For those of you who don't know, and how it's used is any smart money concept buyer or anybody who's relatively smart at all will look to buy when stuff is at a discount, right? So when you go to the store, you don't want to buy something that is super expensive. You want to buy it when it's on discount, right? In this way, in this case, we're going to call it a premium and we're going to call it a discount, right? So when we're trading, we don't want to buy when price is at a premium. We want to buy when price is at a discount, right? So if you look down here, and in this case, we're looking to sell when price is at a discount. So price had this major fall off, right? This leg down. So from up here down to here, this leg down. Okay. And when it got down here, people don't want to keep selling down here because when they're purchasing up all these sell orders, they're buying it when it's at a premium, right? So what are they going to do? Well, the market's going to be manipulated to come up into here into a discount, right? So anything above, or in this case below 50%, is a discount. So when you get up into the 50%, that's when you can decide whether or not you want to go lower, which is what happened right here. We came up, we got into the 50%, a little even past that, and then we had a retracement, or in this case, a little bit of a sell-off, right? I would call this more of a retracement because we didn't break below these lows. We have continued to break above highs. So right now, we are uptrending. But I ended up taking shorts off of us getting into a discount. And let's jump over and I'll show you that right now. So we came up, right? Same thing, 50%. We got up into the 50% range. I didn't take anything here just because nothing lined up for me to take, right? And the main purpose of me taking it here was, so we came up, right here, came up and we broke above these highs. But when we came up and tried to go up above these highs, we failed to do so. And then what did that signal to me? Well, when we had this retracement and then we ended up breaking structure back down to the downside right here, I was looking for sell orders targeting, you know, mainly these spots here. So what happened was we came up, we broke structure. I thought, okay, we're at a 5-minute fair value gap right now. I'm not quite going to enter. I'm going to see what happens with this fair value gap when it was formed. Are we going to reject off of it? Or are we going to be able to get a closure below it like we did right here on this 1-minute candle and then possibly head lower? Okay, so I entered in off of this continuation candle right here. So when we close below these lows, that to me is my entry candle, and it's my entry model for just about any trade that I take is when we get a closure like this or a break structure candle, right? Like we did up here. Entered. So originally, how I would take any trade, I would usually put my stops right above that continuation candle or break structure candle. But in this case, because we didn't tap this fair value gap and get inside of it before heading lower, that had me kind of nervous, right? So I had my stops right here, right above the break of structure candle. Just in the event that we did retrace and we tapped this fair value gap before heading lower, wanted to make sure I was somewhat of the safe side rather than just getting instantly stopped out. Did that take away from my risk to reward ratio? Absolutely. But in the end, it ended up panning out to about a 1.0. I know it's not the greatest, but originally, right, if my stop loss was set to where it, typically would be, which would have been right there, obviously that would have been a great risk to reward, but that's just not how it played out. And the reason why we sold here, right? Because anybody could go, oh, why didn't you keep holding, right? Look how much more it sold off. Look about how much more money you could have made, right? Because you could have made another $937 a contract. Well, okay, we took this liquidity, we took this liquidity, we took this liquidity. To me, that's TP1, TP2, TP3, right? So I sold that TP3 and only had one contract in because it is a small account and I'm trading with one ES mini. It could drop down to micros and we could sell here, here, and here, but then you end up having to cost slightly more in commissions, and it's just not something that I really care to do, right? I just want to get in and get out when I'm on a small account, right? Obviously, if you have a bigger account, you can scale in with more contracts. Then you can, maybe take a trim here, stops at break even, and then you hold out and you get one contract at 900. But that's just not the case. But it's overall a very straightforward trade, right? Waited for 50%, got the entry that I needed, held for TP3. That's about it. That's everything for this trade recap. If you guys do like this content, let me know what you guys don't like, do like in the comments. And as always, please like and subscribe. It only helps me out. And I'll catch you guys in the next one. Peace.